And Gordon,
They say
when do you
themselves
expect
financials, that's
when
not
do you expect
reality.
$87 to hit? You know, when is that? Is that 12-month target?
That's a 2021 year-end price target. So that's next year. We believe by the end of next year, Tesla's price will be at $87 per share.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Woohoo! So guys, I'm so excited. Guess who's back? It's Gordon Johnson, the world's most intelligent Tesla bear. Let's see what he had to say. But first, hey guys, if you're in the US and you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account and fund it with $100, you get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake using the link in the description. Let's get back to it. By the way guys, just to be clear, I'm never attacking the person, just the ideas.
Been talking about it all morning long. Tesla shares are under pressure after its record rise to $2,000 a share last week. But was this run-up warranted? Our next guest says, nope. Gordon Johnson is founder and CEO of GLJ Research and a longtime Tesla bear. Gordon, good to speak with you this morning here. What is your price target on Tesla right now and why?
Yeah, our price target is $87 per share. That's a 2021 year-end price target. And listen, Tesla is detached from reality. It's trading at more than double VW's market cap, yet VW sold 11 million cars last year. Tesla sold just under 370,000 cars last year, looking to sell roughly 500,000 cars this year. In a nutshell, Tesla is essentially a busted growth story. And I know that sounds crazy to people looking at the stock. Their U.S. sales peaked in the fourth quarter of 18. They haven't had higher U.S. sales since the fourth quarter of 18.
Psst, Gordon, I'll say this quietly so I don't embarrass you in front of everybody. Ready? Maybe you don't know, but Tesla's an international company. They sell products globally. So imagine this. Imagine if, since they started selling vehicles in the US and they sell vehicles internationally, that in some quarters, maybe they sell a few more cars in Australia. Maybe they ship a few more to Sweden and Poland. And that means there's less in the US. That might account for the fact that their sales in the US aren't consistently the same. Shh, don't tell anyone.
Their U.S. gross margins peaked in the third quarter of 18. Their global sales peaked essentially in the fourth quarter of 18. And you're looking at a company that, excluding credit revenues, which are one-time in nature, and we know next year is will essentially drop to zero for them.
Spoiler alert, when Gordon says essentially, it means I'm lying, I'm misleading, I'm saying things that just aren't true. That's why I said essentially, so I don't get into too much trouble. What do you mean their regulatory credits are going to drop to zero next year? This is just absolute horseshit. Like, where did this information come from? Oh, his rear end, I know.
In the second quarter, they lost $300 million. Now, listen, we had a tulip bubble, right, 100 years ago where people kept buying tulips, and because they were buying, they kept buying. But here's the reality. There's an analyst note out today saying Tesla's seeing strong growth in China. The reality is, in the month of July, they sold about 11.4 thousand cars in China. They produced about 12.2. So they actually built inventory, and that's despite 8 price cuts globally this year, 4 of which were in China.
Gordon. I said a few videos ago, you keep going on television talking shit and lying, I'm going to keep roasting you and revealing these lies on YouTube. Keep doing it, mate. I'll still be here. So he implies that their sales in China are falling because they produced a few more vehicles than they sold in a month. Now, I don't know if you guys know this, but let's walk through the logic here. When a car comes off a production line at the Tesla factory in China, it isn't already in the customer's backyard, is it? It actually has to get delivered to the customer. Believe it or not, there's always going to be some vehicles left over at the end of a quarter because they actually have to get transported to the customers who aren't living inside the fucking factory. Non-issue. This is just manipulation of data to make it look bad when it's not. What was the next point? Oh, that's right. Despite 8 price cuts. Again, guys, pro tip if you don't know this, maybe you do by now. Tesla doesn't cut the prices of its vehicles because they can't sell them. Tesla's cutting the prices of their vehicles to expand their market because their costs are coming down and their goal is to accelerate the world's transition to sustainable energy. They will keep cutting prices ad infinitum. Doesn't mean there's a lack of demand. It means that Tesla's costs have come down. It's a positive indicator. They're going to keep doing this and everyone's going to keep saying, oh my God, there's no demand, the prices are coming down. Eventually they'll realize that that's Tesla's goal, is to drive down the cost of their vehicles so more and more people can afford them and accelerate their mission.
So they're cutting the price of the cars. They have another facility in China, and yet they're selling less cars. So we think reality is much different than what is being pumped out there. And we think the stock price is driving analyst opinions, which is confounding to us versus reality.
Gordon, let me ask you. Listen, I was a stock analyst, a sell side for over 10 years. You have an $87 price target on Tesla. The stock's now over $2,000. How can you keep that call in place?
Well, I mean, it's simple, right? It's their earnings times what I think they're going to grow long term. So
You actually, real quick, on earnings, this year you're looking for a loss of $1.58 per share. Now, the street's at about 870. Why are you still looking for a loss? I mean, the way I think about it, you're looking for a full-on meltdown in the back half of the year.
Right. It's not even a meltdown. Again, they sold 400. They're selling credit. They're recognizing sales on credit revenues based on their financials that they haven't even sold yet. So they're recognizing credit revenue sales on cars that haven't been sold. We don't know how they're doing that, but they're doing it. We're not saying it's wrong, but we'd like a better explanation. But again, keep in mind, over the history of Tesla, I think it's like 32 quarters. In only 3 of those quarters, actually 4 of those quarters, 4 of 32 quarters, have they actually had a positive net income excluding credit revenue sales. That's essentially taxpayer incentives that they're getting for selling credit revenues to other car companies. The problem is all of those car companies are now selling electric cars. And Tesla is guiding their credit revenue sales to be down 50% in the back half of this year. So it's not a meltdown. It's just their core business is loss making. There's no doubt about this. If you take the credit revenues away, they lost $300 million last quarter.
And Gordon, when do you expect $87 to hit? When is that? Is that 12-month target?
That's a 2021 year-end price target. So that's next year. We believe by the end of next year, Tesla's price will be at $87 per share.
Glad to hear the host actually asking some of those questions. How in the can you possibly justify your ridiculous price target, Gordon? He doesn't have an answer of any substance either. So, regulatory credits. Oh, yeah, fucking, I don't really know. Here's the deal. Gordon's not an idiot. There's no way that he's that dumb. So let's scratch that. But is he a short seller? Is it in his best interest to be short Tesla and then go on television and then make a fool of himself, but convince a few investors to panic sell out of the stock and bring the price down? Maybe. Didn't think of that, did ya?
Playing the bull scenario, though, what about bulls that say, look, this is really a technology company. You can't think of this as an automobile company. This is about software. This is about the battery. What do you make of that argument?
Right. So that's been the argument, for the past 5 years. Here's the reality on the battery. They have a battery day 922. Tesla buys its batteries from Panasonic, LG, and CATL. Let's go to Panasonic. Panasonic makes cylindrical batteries for Tesla. Anybody can buy those batteries, but nobody's buying them. If you look at CATL said they're going to have a 1,000,000-mile battery. This was something that was rumored that Tesla was going to come out with on Battery Day. Anybody can buy CATL's battery. And LG Chem just announced they partnered with GM to develop new batteries. And then if you look at what Toyota is doing, they're focusing on solid state, which is the next generation. There is no secret sauce. Tesla does not make its own batteries. That has been a wide misconception for a while. And if you look at their technology, the FSD, full self-drive technology, Navigant ranks Tesla dead last. Tesla uses radar. The technology that everybody else uses is LiDAR. And we don't think it's a chip issue, right? Elon Musk keeps coming out 2.0, 2.5, 3.0, 4.0. He keeps pushing out when there'll be full self-drive technology. We don't think it's a chip issue. We think it's a software issue. They're using radar versus LiDAR, and we don't think they're collecting the miles. We'd like to see where they're spending the money to collect those miles. Listen, if Tesla is the technology leader, why has their R&D spend as a percent of revenue dropped from roughly 12% in 2017 to 5% thus far this year, the lowest amount ever in the history of the company?
I don't want to embarrass you again, Gordon, so I'll whisper this one too. Has it occurred to you that Tesla's becoming more efficient with their capital expenditure? That's why they're spending less. Oh, by the way, comparing 8 months into 1 year to 12 months of the previous year, not really fair, is it? The year isn't complete anyway. You don't have a complete picture.
We think there's a lot of misconceptions out there. If you look at what the specialists and the people out there who actually rank the technology says, they say Tesla's dead last, and we think there's real risk to that whole theory and thesis. They increased the price of their full self-drive technology recently, and their sales of FSD in a number of different countries have fallen by 50%. So again, when you say that we're projecting a collapse, no, we're just projecting that they're going to do less credit revenue sales. They're saying themselves their credit revenue sales are going to be down 50% in the back half. They drop to nearly 0% next year. And when that happens, we think the company goes back into structural losses. Again, without credit sales in Q2, they would have lost $300 million. So it's just a huge disconnect, reality versus what people are saying. Again, there's an analyst out today saying China's sales are great. The real data, July data, shows that they're selling less than what they're producing. So
here's a fun fact. Honesty and integrity are two of my highest values. I think in Gordon's case, they're probably at the bottom of the pile. I mean, come on. How on earth can you possibly attempt to imply that Tesla sales in China are declining while they're ramping a fucking factory up towards 200,000 vehicles a year from zero by suggesting, oh, they didn't sell every single car they produced in the last month, therefore demand is declining. Like, you're not fooling anyone, mate.
Just the real data doesn't match up. We think when that matches
Gordon,
up, you're going to have selling that we think drives the stock lower.
Gordon, how long are you willing to sit with this call? Because now I'm looking on to 2021. The street is looking for about close to about $15.50 per share in earnings. I mean, they're selling cars. They've had 4 quarters of earnings. How long are you willing to sit tight here?
Right, but I just want to stress, you can't say they had full quarters of earnings without understanding where those earnings came from. Those earnings.
But it doesn't matter. They still had earnings.
Those sell of credits, they say, are one time in nature. So if you have to look at what they're doing and what they actually do. They make cars and the profitability on them making cars. Their auto gross margins peaked in the third quarter.
But why should they be penalized? That is still part of their business. Isn't that something you do plug into your model?
Great questioning there from the host. And I've covered this before. The fact that Tesla is able to access these regulatory credits doesn't make them dependent on them. Okay? They have people who manage the resources, the money, the cash, and go, oh, we can collect this cash over here. Let's collect that cash. And then before we decide to keep it and show a profit, we can redeploy that if we want. Research and development, build a new gigafactory, buy a gigapress to bring down a manufacturing cost, those kind of things. Tesla is not dependent on regulatory credits. They access them while they're available and use those, knowing that they're available currently and they may not be available in the future. This is a non-starter of an argument.
No, that's one time. So they're saying listen, the only reason they're selling credit sales is because companies weren't selling EVs. Now every single company, VW, Porsche, GM, Ford, Renault, every single company is selling EVs, so they no longer need to buy those credit revenues, those credits from Tesla. So those are revenues that are going to go away. Those are 100% gross margin revenues that are going to go away essentially next year.
Did you guys catch that magical word, essentially? I remember I said earlier when he says essentially, he's probably lying. That's right, I think he's lying because it's total BS. Where's your evidence, Gordon? Where is this information coming from? Oh, that's right, your rectum. Smells like bullshit to me.
Be down 50% in the second half of this year versus the first half. So when you say, is that part of their business? Any business that is structurally dependent on taxpayers essentially giving them money versus being profitable in their core business, we don't think it's sustainable. So when you say, how long am I willing to sit with this call? Let's see if they print a profit, right, in the fourth quarter of this year, and let's see how their earnings trend next year, and let's see what their deliveries come in for the full year this year, right? This company is trading at a growth multiple that suggests their earnings, their revenues, and their volume should be growing exponentially every quarter. We're going to get the numbers for 3Q. We're going to get the numbers for 4Q. I think they're going to disappoint. And I think with all this competition coming in, people compare Tesla to Amazon. I think it's more like AOL. They have technology that is outdated. You have new technology from automakers who are proven that are coming for Tesla's neck, if you will. And if you look at the EU, right, Norway, Netherlands, Spain, in the fourth quarter of last year, their market share was 37%. Quarter to date, 2Q, their market share is less than 3%. That's a market where you have real competition. So 37% to 3%. When have you ever heard anybody talk about these numbers? I don't think you have.
He tried this crap last time. Cherry pick 1 or 2 markets, imply that demand is collapsing globally because sales are down month on month or quarter over quarter. Don't know if you realize this, Gordon. Like I said earlier, Tesla is an international company. Sometimes they put cars on boats to some countries. Other times they go to a different country. Therefore, demand may look like it's collapsing if you don't engage your brain or you're trying to manipulate the stock market. Not implying which is which, I'm just saying.
So people are putting out, Tesla leads in technology. What technology do they lead in? They do not lead in technology. So I think when the numbers actually hit the paper and the credit sales go away, which even Tesla's got into a 50% decline in credit sales in the back half of this year, and you see those numbers, those losses start to creep back in. Again, 2Q, excluding credit sales, $300 million loss, I think the stock really starts to tumble. The point is, I don't think people understand what they own in Tesla. Everybody talks about this technology leader. They don't make batteries. The rate of last in FSD. But every time I talk, the question is, are they the technology leader? I don't think they are, and I think that's going to be proven this year.
I really wish I didn't feel compelled to make these videos, but I just can't stay quiet when some doofus goes on television, misleads, deceives, and implies things that are just not true. I will not let it slide. Even if one investor sees this video and realizes this guy's full of shit, my job is done. Let me know in the comments below, guys. Do you think Gordon Johnson genuinely actually believes the garbage that's coming out of his mouth? Or is it perhaps a possibility that maybe he's got a short position and it's in his best interest to go on television, open his trap, embarrass himself saying absolutely ridiculous things, get roasted on YouTube, and still make a pile of money because he had a short position, the stock went down because he went on television, and everybody wins? Let me know. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Psst, Gordon. I'm not going anywhere, mate. See you next time. And of course, don't forget your free stocks with WeBull. If you're in the US, you can start a new account with WeBull using my link below. Deposit $100, you'll get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, New Zealand, or the UK, you can get a free stock using the link in the description to stake.
Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.